founder and chief investment manager. On our channel, we bring you a groundbreaking perspective on the global economy. I believe that thorough research and knowledge leads us to unique perspectives on the global and Indian economy, an insight into current events that lets us provide our clients with excellent results. We work with great companies and intelligent investors who partner with us and use our insights to stay ahead of the curve and innovate. This generates wealth and infuses new energy into their businesses and our community. The past few years have been a really exciting time to be around, from the global financial crisis to Indians being allowed to invest globally for the first time. Opportunities have been there for the taking. For the well-informed investor, the markets have been easy to navigate. To traditional investors still investing their monies through bank branches and stockbrokers, the results have been reflected in their portfolios and the share prices of nearly all stockbrokers. What is more important is taking the right steps into the future. Virgo Analytics provides you with India's first platform whose principal service is to give you the correct advice. A business whose ethics are in the right place and whose business interest is aligned with yours. Words might come easy to some, but here at Virgo, we stand by them. The next few years are going to see a lot of growth, booms and busts. The World Bank has pegged a figure of 20 million new jobs annually just for India to be able to sustain its growth. It has also said that globally, 600 million new jobs would be needed by 2020. At this time, China would have already hit an average age of 39, and in 2020, India would have an average age of 29 for its population. What does this mean? What are its implications? Well, most money managers would be ready to pitch the idea of a glorious India with a growing population to you. But I would like to ask you three simple questions.
While India saw a boom in the last decade, the market capitalization of Infosys went from $8 billion to $25 billion between 2002 to 2012. Meanwhile, America was either in stagnation or recession for most of this period, but Apple Corporation went from being a $5 billion company in 2002 to a $500 billion market capitalization in the same period. If global investors reward innovation a 100-fold increase, has your money been chasing innovation? Overseas operations of all Indian companies now account for more than 10% of overall corporate profitability, compared with just 2% 5 years back. Over half the earnings of India's top 50 companies are now outward facing or dependent on exports, global markets and such factors. Why are Indian companies choosing growth abroad? Your portfolio and investment strategy should have been prepared for this. Have you been ahead of the curve or are you still lagging behind? Between 2006 and 2008, Americans were granted 82,000 patents, South Koreans 80,000, Chinese about 34,000, Indians 1,358. We ranked 16th, right behind Kazakhstan. They were ahead of us at 15 with 1,459 patents. America also spent about $400 billion on R&D last year. China spent about 66. India spent about $9.1 billion, right behind Israel, which spent about 9.8. The difference is much more startling when you realize that Israel spent about 5% of its GDP on R&D and India spent all but 0.7%. An off-topic remark is that we spend more on the National Rural Employment Guarantee Scheme than we spend on R&D. They say you can only harvest as much as you sow. If we don't spend on R&D, will we ever grow as a country? The question to you is, what portion of your portfolio is geared towards companies and countries that are spending on R&D?